Good morning and welcome back to Almus Market Mornings. Trade tensions continue to simmer. China has cancelled some Boeing aircraft orders, while the US has tightened chip export rules on Nvidia, keeping global markets on edge. Back home, India's inflation has eased to its lowest level in nearly 6 years, strengthening the case for further rate cuts. However, the widening trade deficit presents a mixed picture. JK, how are you reading the latest data from India and what does it signal for the rupee going forward?
Swaraj, yes, now we are back to watching the macro data after the market turbulence, which has somewhat eased off a bit in the recent sessions, and we had a lot of them from India side. We had the WPI wholesale price index, which saw further easing from the last month at 2.05% and well below expectations as well. And again, food inflation was a contributor to the fall. On the retail CPI inflation, it came well below the expectation of 3.6% at 3.31%. And in fact, month on month, there has been a disinflation of minus 0.26%. Core, of course, that is excluding food and fuel, it has gone up by 0.2% from 3.9% to 4.1%. But overall, it's a good news. I mean, as Governor has also pointed to, full year inflation being at 4%, it gives a lot of comfort for RBI to focus on growth and use. I can see at least one more rate cut immediately coming, and then of course we'll look at how the global markets behave as well. And then before the CPI, we had the trade deficit in India, and that was somewhat underwhelming. Overall deficit increased sharply. That is including merchandise, goods, and services, increased to 3.63 billion of deficit, and we had almost 4 billion of surplus last month, and goods deficit widened to 21.54 billion from 14.05 billion. But this is not actually worrying because if you look at the February deficit, it was much lower, and there was a big fall in the import bill in February. And in March, we saw a rise in the import bill by 12.55 billion and exports also rose by 5.06 billion. It might be a technical factor, which otherwise would have been part of it would have been appearing in the February, March as well. But if you look at the overall picture, the merchandise deficit has remained between 20 and 25 billion, and the overall deficit is between 2 to 5 billion of no, deficit, which is normal in current Indian scenario. Of course, we'll also have to factor in going forward what impact the US tariffs will have on our exports, the negotiations, how they proceed, and all those things. Despite these factors, rupee had a strong tendency to strengthen yesterday. We had a very large custodial flow of around 6,000 crores. And I think there was a bit of a dent on the dollar, even after opening with a gap. And of course, the 85.50 was protected. Possibly that will continue to get protected because of the Asian peers are actually weak, particularly the Chinese one continues to be on the weaker side. There is uncertainty about the exports going forward, and therefore a strong rupee is not going to be of a big help. So RBI might also start to build some reserves at these lower levels. So I think 85.50 will be protected, although we might continue to see inflows. Interestingly, if you look at the Indian equity market, they have regained almost, not almost, it has regained the entire loss of equity index that occurred after the Trump tariff on April 2nd. So that's quite an outperformance by the Indian market, and that could be along with the lower inflation and steady growth of over 6%. And also the policy actions by RBI that could be attracting the foreign investors. And so we see without RBI, there can be some pressure on the rupee to appreciate as well. On the global side, also, we had some macro news from Eurozone. Industrial production was higher, but the ZEW sentiment massively dropped. And this had a lot to do with the uncertainty that the Eurozone faces due to the tariffs. Eurozone is a hugely no international trade dependent country on rather on export oriented economy, and with higher tariffs that could get affected, and that is why the sentiment, economic sentiment was quite a bit affected. However, the industrial production rising has been a small positive. Uh, on the on the negotiations on uh, China side, there has been no progress. In fact, as you mentioned, there has been further, negative news. In fact, apart from what you mentioned, we also saw a news where it says that the Hong Kong Post has suspended postal service for items that contain goods to the United States. There is also indications that some of the key materials, will be banned for exports from China to US, on which US depends. So I think we are reaching a point when somebody will have to blink and probably call the other party for a discussion, and because this is not going to help either country, and eventually it will also have an impact on the global economy. So I think while we are reaching, we are getting seeing a worse situation day by day, but I think the day of reckoning has to come at some point. Otherwise, the global markets have been quite steady. In fact, the data from China today has been quite encouraging. Uh, GDP growth remained at 5.4%, like last month, while expectation was for a slight drop to 5.1%. Industrial production was set to 7.7% versus 5.9%. Retail sales was also higher at 5.9%. So overall, yeah, I think the Chinese economy is giving a good vibe, at least based on probably the domestic demand and consumption has been responsible for this rise. And possibly ahead of tariffs, there was a lot of exports that were preponed to the US to avoid the higher tariff, and that resulted in a higher industrial production as well, adding to the GDP growth also. All in all, it has been good news, but although because the trade war remains the major concern for the market, the Chinese one has not reacted, but it still trades above 7.32. As we said yesterday, dollar having risen a lot in a very short period of time has undergone some correction. Of course, we traded below 1.13 also in the euro. Since then bounced, but that doesn't mean that it isn't. It probably will dip some more as a rate cut probability of ECB, even of 0.5% in tomorrow's meeting is quite high. So the euro can see some more profit taking, although the underlying trend seems to be one of good strength. On other currencies, GBP has taken good, vibe from the employment data, where the wages have been rising. So the chances of Bank of England cutting rate again looks look slimmer. Rupee, as I said, is also firmer at around 85.60. Looks to be needing central bank support for the dollar, and otherwise it has a tendency to get stronger. Today we have important events like retail sales, and also followed by a speech by Jerome Powell, whom the market would like to hear under the current market turbulence. Thank you.
Thank you, JK. And just quickly summarizing, as you mentioned rightly, the theme was people focusing back on the macro data. On the Indian side, we had the WPI inflation, which saw easing. Even the retail CPI came in lower. Overall, it gives comfort for the RBI to focus on the growth needs. Trade deficit was slightly underwhelming, goods deficit widening to $21 billion in March. But looking at the overall picture, the overall deficit remains at the $2 to $5 billion mark, taking into account the services surplus. Despite these, rupee saw a good amount of strength, but 85.50 was protected on the lower side. The Asian peers remain weak, particularly the Chinese yuan, and that is why the downside may be slightly capped for the USDNR. But looking at today's pre-opening, it seems that there may be some dollar support required from the central bank. On the data front, On the global markets, industrial production in Europe was higher. No negotiations when it comes to China and US trade resolution. And just one very interesting thing from China is that before, of course, all this tariff things started, the data from China was actually pretty strong. The industrial production was sharply higher, some positive shoots when it comes to even the Chinese retail sales data. But one important thing to keep in mind is something JK mentioned, that a lot of exports to the US was preponed due to tariffs. So that's also one important thing. Today we have the US retail sales data and a speech by Mr. Jerome Powell that will be closely looked at. That's it from us today. Thanks for listening. Tune in tomorrow for the latest in the financial markets.